Hello traders, it is Samurai Trader. I'd like to welcome you here to our trade recap. In this particular session I'm going to be recapping two particular markets: the European market, the FESX 1000 share bar or volume, and we're also going to be looking at yesterday's ES 144. Now of course yesterday's market was Sunday afternoon in the USA, and we have a lot of US traders that get home from work that like to trade the ES after hours. Well, Sundays traditionally a lot quieter than other markets or other particular days, and the later in the day into the evening it goes, the volume really dries up until Europe opens up, which is what we're going to be looking at. We're also going to be looking at some live trades today. I took I think it was 4 live trades yesterday, and it was quite a challenging day. As much as they all worked out to be winners, it could have been opposite. I could have had picked up a couple of losses. So I'm going to be talking about those, and I really think there's some great examples, and for our newer traders particularly, some really good learning experiences there. Now also please subscribe to my YouTube channel to be kept up to date with the world's best trading strategies for active traders. For my current coaching clients, you'll know that I've got a huge library. I've been involved in the trading industry now for over 20 years, and I've had my own research development team and work with institutions, and we've back tested and live tested literally hundreds of different systems. So what I present to you are what I believe to be some of the world's best day trading systems. We've got one or two that we don't disclose because some of the traders that I'm working with, they're proprietary to them, but the systems that I do show you, or the setups, work like a treat, and they make money day in, day out. Now we've got other companies out there are charging thousands of dollars for these strategies and setups, so no need to do that. If you wish to have coaching from me, please drop me an email and I can send you information. On top of that, I'm only too happy to give you have a free consultation on Skype with you. If you're not achieving the trading targets that you wish to be achieving, give me a call and let's have a chat about it. If you're making mistakes consistently, if you've been trying to make money as a trader for years, or perhaps if you're a new and budding trader, we need to talk, because I can get you for $297 onwards. I can get you up and running fairly quickly. And just a couple of things before we get into the charts, and please, if you just started to watch this YouTube video, do not hang up, keep watching, because I want to go through half a dozen slides of some things that are absolutely critical, things that I see with the traders that I deal with every day. Jesse Livermore said this many years ago: it was never my thinking that made the big money for me, it was always my sitting. And many of you have heard me talk about having the sniper mentality, and as you know, this is what turned my trading around forever, is by having this mentality. Okay, I'm a sniper, I'm sitting there laying in wait. And if you consider the skill set of a sniper, they're patient, they're independent, they're clever, they can make decisions on their own. Their marksmanship, their ability to keep learning, their discipline, their attention to details. Another big thing, understanding his enemy. In other words, understanding your market, which is critical, knowing when to shoot and when not to shoot. Now, in other words, if we consider it sniper back to trading, does it meet your rules? Is it the right time? Is it the right market? A great sniper is very good at recording and their data keeping skills, and of course your ability to stay at it for long hours. In other words, I've got to lay in wait. And in our particular business is exactly the same. All the qualities of a great sniper applies to a great trader. Remember, my job as your coach is to take you from great or average to great to epic. And an email I received recently was someone said, look, I want to become a good trader. And as I said back to him, is that it's not about becoming good, you've got to have the goal of becoming great. Good traders, in my opinion, don't last. The market will eventually get you. You've got to become great at what you do. You've got to become a great trader, because it's really tough out there. It's tough trading. And Successful trading, as this slide says, is a game of probabilities. The market has a memory. Patterns repeat themselves every day, and absolutely critical, in my opinion, that you think like a casino, because if we look at trading as 100%, 90% is psychology, 5% money management, and 5% is your trade setup. I had an email from a potential client a couple of days ago that said, can I make money from lagging indicators? Is that possible? Well, of course, I use the 89 EMA for trend direction. That's really lagging. I use a lot of indicators that are lagging, like a stochastic, my platinum. These are all lagging indicators, but what they do, they set up patterns. And what gives me my edge as a trader? It's my patterns, my indicators, my trading rules, and my money management. Yes, using lagging indicators, if you follow the rules, you can make a great deal of money. But what I'm after is patterns. My indicators set those patterns up, strictly followed by my trading rules and, of course, my money management. Now, one other thing before we move over to the charts, and I already know, by the way, I can already have the thinking of some of you, or read the minds of some of you watching this video here today. Well, come on, get on with it. You know what? Great traders are learners, and I once read that the sign of an intelligent person is how open they are to new ideas. Now, remember I spoke last week about Jack Welch, the great CEO of GE, and he said lack of candor is the greatest killer in business. Well, lack of candor is the greatest killer also for traders. Now, so please listen very carefully to what I have to say here, that if you try to do business in every market, you'll be a master of none. Likewise, if you try to do business in lots of time frames, if you're looking at lots of charts, you have what we call ego depletion. And please feel free to Google that now. It's actually a scientific thing based upon knowledge. Ego depletion. The more decisions we have to make, the harder it is. And what we all end up is suffering from is what we call confused knowledge. The more decisions we're going to store, we're going to become confused. It's draining from a mental point of view, etc. And as Richard Branson says, and as you hear me talk about, complexity is your enemy. Any fool can make something look complicated. It's hard to keep things simple, and that's really important with trading. So let's get to the charts. Now I'm going to get off my high horse, and I know I get wound up about this because I want to make you and work with you and go on that journey with you in watching you become an epic trader. Some of the testimonials I'm now getting and the feedback I'm getting from some of the traders I'm working with is outstanding, but the biggest thing with them, they're open-minded. And that's just so important for you as a trader to go to the next level, that you be open-minded. Now, when I say open-minded, I'm talking about rushing in and spending thousands of dollars on trading systems. Okay, I'm being open-minded with constructive feedback. Okay, let's get on with this yesterday. So this is the open in the USA in Sunday afternoon, and this is the ES 144 tick. As most of you know, this is what I trade with the aftermarket. During the day when the ES is open, because of volume, trying to trade the 144 is near impossible. I mean, the market moves that quickly. I can't trade it. If you're a great scalper, maybe you've got an advantage over me, and great if you have, but I tend to find that I need to trade the 550 tick, 1000 volume, 2000 volume, maybe for trend direction. Now, saying that, I prefer to be trading the NQ as my preferred market to trade. However, the ES kicks butt in my opinion after hours. Now, it was a tough market yesterday, as we'll see during the day. Now, this is from 9 a.m. here. We had an 89 EMA bounce. That was untradeable, and the reason was that all formed within 3 minutes of a market open. Very, very difficult. Up here we then had a T25. Now, when we're talking about lagging indicators, a lot of these indicators on my screen, well, basically I've got a zero lag, which is almost non-lagging, a zero lag MA, but what we've got here is a T25. Now, T25 is a 2 to 5 candle pullback in a trend, so it's pure price action. There is no lagging. Now, what I like to see though in a T25, so we've had 2 candles pull back, and actually let me just get back up to a full, where are we here, get back to a full, no, that's not what I want, sorry traders. I just want to get to make it a little easier for you to see. There we go. So we've got 2 candle pullback, but I like to see personally a full candle. But there's one other issue with this particular setup. See my EMA channel here. I ideally like to see, if I haven't had any patterns or any consistent price action, I like to see my price action launch from the channel, because usually we're to pull back, which is exactly what happened. Now notice here, this is a 2-tick candle. It was only up half. I don't like those personally. Now but it was a T25, 1, 2, and I go back to 5 candle pullbacks. Now up here we also then had some divergence on the platinum, and we then had a pull away on price. Now here you had a beautiful you had a T10 setting up here. Now ideally, when I say beautiful setup, it actually wasn't. I just looked at my long-term stochastic. Now a T10, I like to see the long-term stochastic breaking over the 0 line here. Now see this T10 down here. Notice how my long-term stochastic is in an uptrend. We've got a pullback. Okay, all right, this is an ideal setup, but the reason we didn't take this trade, I marked up these live yesterday, is that we right on a pivot. See this black dotted line here, and also the time of day. This is 2:20, around 2 o'clock in the afternoon. So the market had been open 5 hours. Look, there's very low volume. The market's dead, forget it. So notice a comment I put in here, time of day and pivot. Now here we had a T going back, we had a T98. Now I keep getting emails nearly every day, what's a T98? Well, that's where I have my trigger line cross through the 0 lag. These are a great change in trend direction indicator. I won't spend any time here. It's a counter trend trade, but they're very accurate, except when you get in chop, when nothing really works. So getting back here, I then had a T1 and sorry, I had a T1 form here, but previously I had a T2. Now with this T2 here, I didn't have a 0 lag. Now I'm covering a lot of trade setups in a short period of time. Watch a number of my other videos and you'll pick these up, and of course in training we cover these very slowly. You pick them up. They're not rocket science. These are great simplistic setups that work brilliantly. But notice this here, as time goes on, we hit 5 o'clock just here. This is the pre-market open in London. It's 8 a.m. over there, but notice the 89 EMA is sideways. I call this chop city. Some people in the FX industry call it railway tracks. The market, it's just a very dangerous time to start trading. It really is. You should be staying out of this market. Remember, getting back to the sniper mentality. What are snipers? They're patient and they're disciplined. Traders, we only need 2 to 4 good trades a day and we become very wealthy. Now that brings up a question. You know, most of the traders know I trade 10 contract lots, and you know, I'm not making a fortune from it, but at $200 a contract, that's a couple of thousand a day. You know, it's a great living. And people say to me, why do I train? Why not just trade? Well, you know what, training traders makes me razor sharp, and I probably learn more than you because of the traders that I'm training. The feedback I'm getting, it makes me more disciplined. I'm increasing my lot size, and I just love it. So by training people and taking you to the next level, it's improving my trading. And the old saying is, he who teaches learns twice. Getting back to here. All right, so 6 p.m. Where I live in this part of the world is 9 a.m. in London, and the volume's up. Now we can start trading. All right, we've had a this is almost a T25 here set up, but actually down here it's a great T10. Look at this here. My long-term stochastic is in an uptrend. We pull down, the short-term comes down, kicks up, and we're in business. We're cooking with gas, away we go. Now up the top here, you may notice I marked it up. It's a T89. What's a T89? A T89 is a counter trend trade when price action is well out of our channel. And let me just mark this up a little bit here. Notice here that we're getting what I call angulation. Here's my 89 EMA, and notice the wedge here, the angle away, and my entry is outside here. This is a T89. These are a highly accurate trade, counter trend trade. However, newer traders, remember, I slap you on the wrist if you take these. You're going to trend trade only until you become a master at trend trading, because counter trend trading, you will have a higher percentage of losses, but because we're going for a 2-to-1 risk reward, you're going to do very well. But let's stick with trend trading initially. Now let's have a look at a couple of live trades that I then took. Now at this time, if I remember correctly, it was 1837. It was 6:37 p.m. my time. I love the T10s. Here's a T10 winner. Here's another T10. I jumped in on this T10. Now normally with the ES 144, my target is 6 ticks. Now here I pulled it back to 5 ticks. Now I actually put this in at the time. My target is generally the 89. If you've got an 89 EMA, it'll act as support or resistance, time in, time out. So you can see here I decided to go for 1 tick below, which still can be dangerous at times, but I still, well, I thought, no, I'm going to go for 1 tick because my gut feel was I was going to tick through, and it would have hit my normal target of 6 ticks, but I took 5. Now that's still 62.50 per contract, 5 ticks on the ES, less $4 odd in brokerage. Why did I make it a 5-tick target? Because sure enough, it bounced. Now eventually it bounced through and delivered another trade, which I'll talk in a moment. So just be very aware, traders, that when you're coming up against the 89, as you know, one of our favorite trades is the 89 bounce. It is where we bounce off the 89. Hence, sometimes we need to adjust our targets to allow for that. So that was the first trade. That was 62.50 per contract. Now I then entered another trade here, and you can see my trade station entries here at 10, a short at 10 right there. This plots automatically, and then I shorted another 10 here. Now this particular trade here was a T1. Now a T1 is the white paint bar. Can you just see that there? And my entry, remember, our paint bar does not plot until we have a tick below of his second bar, so I shorted here. Now there was a red flag at 7:30 p.m. We had a couple of things against us here. We had one, a pivot, and we can see the black dotted lines here, and it was getting very close to a red flag announcement at 7:30. Now in the end the market moved very little. However, I like to exit well before red flag. So instead of picking up 6 ticks, once again I got out at 3. Now it ticked down 4 ticks. I got out at +3, which was what's at 37.50 per contract, and I decided to then stay out. Now a little further along, and I'm going to flick over, we had a T10. We can see here our 89 is going down, and then we had some great T2s. Now what I want to do though, without going through and comment, and by the way, I didn't take that T10, you can see here I wasn't in on this trade. What I want to do, traders, is just flick over. I'm just going to put this on hold, and I want to show you the European market at the same time, what was happening there. So just one moment. Okay, so what we've got here is the FESX 1000 volume, 1000 share candles, and let's just go back over here. So the pre-market in London opens at 8 a.m. You have very thin volume, generally speaking, on this particular futures market until it really picks up. So in the US, this is very early in the morning for you. Its personality is very different to say the NQ or to the ES. It's a very slow, it really moves very differently. And once again, Become a specialist. Get to know the personality of your market. For an example, and actually I'm going to do a Forex recap later on today, but Forex is very different. Say to the yes, it's totally different to the FESX. With the E-minis for futures markets, of course, you can get a lot of false breakouts. I tend to find that you get a lot more follow through on the Forex market. Another big advantage for Forex, and I won't get into talking too much about Forex versus futures today, is that if you're a newer trader, you can start out by trading micros and mini contracts, which is a great way of cutting your teeth initially. But as I say, when you use your simulator or mini or micro accounts, assume that you're trading full amounts of cash, because what you don't want to do, and I see this with a lot of clients that I coach, is they've hardwired bad habits in by saying, oh, it was only $50 I lost. I'm trading micro, it was only $100 I lost. Wrong. You are hardwiring bad habits. So that's a conversation for another time. So let's go and have a look at this. So at 6 p.m., an hour after the market opens, we had a lovely T1 right here. We can see our 89's trending, starting to trend up. We got in on this candle here, and I wasn't trading live on this particular one, but I was actually coaching at this stage some of my actually a client in London. So we're marking these up as the market went, and lovely 4 ticks. Now 4 ticks is about $55 per contract, something in that sort of range. So this is generally my target on this, maybe 4 to 5 ticks, depends on the client what we're after. I usually go for 4. We had another one here. Now I had to actually reboot. Now unfortunately sometimes I'll get my paint bars don't replot, so it was actually a T1 right here. We had our entry there, that was good for 4, and we had another one here. Now if your target's $100 per contract per day, which is a fantastic return, the way we trade, you would have packed up your bags and gone home after this second trade. You had another nice one here. So you're up over 150 per contract. Now let's now have a look at what happened thereafter. This is something that I see happens a great deal. As in any market, after 3 or 4 trades in a trend, it's amazing how often you'll have a pullback or a change in trend. Now here we can see we ended up having a lot of resistance up here, and you can see it right here. I've got a pivot just here, but you can see here you ticked up 2, and the comment I put here is time is not on your side. That is, we're ticking away sideways here for 45-50 minutes, and time is not on your side. That is, the longer the trade goes, the higher the risk, the greater the chance we are wrong. Things are changing. I like to see carry through on my initial trading decision. Now notice down here my long-term stochastic is broken through the 0 and is starting to fall, and we can see here we're starting to fall away. That is not good. On top of that, notice my platinum. Notice how I've fallen below the 0 line. This is not a good signal. So if you're long here, which actually my trader in London actually was long here, he stopped and reversed on this particular trade right here. It was basically a break even, but then he shorted, and actually I took this trade as well. As you can see, I shorted 10 contracts. Here is why. This is basically a T10 setup. Notice here okay, I've had a double top here, we've shorted, I had a 4 tick stop. Now here, if you had a 3 tick stop just going for 1 tick, you would have been stopped out here, but you can see here my 4 tick stop kept me in this trade. My target is 4 ticks, my stop is 4 ticks, and I was hit right here. So I was out. When I say hit, I hit my target. But what gave me a great deal of comfort and discomfort at the same time was I had a pivot bounce here. It started to get a bit hairy because see it going against me. So we had a nice 89 bounce if you weren't in on this trade, and that was good for 3 ticks. But look at this. Look at my long-term stochastic, and please excuse the dog barking in the background there. my long-term stock is down. I'm still well down below zero. I've still stayed with the trade. Then we finally collapsed. Now there's a comment here I also wrote down is watch when the 89 is on the pivot. That's what that means. So notice here my 89 EMA is starting to go sideways. We can see here I got out my full, that's full 10, I was stopped out profitably on 10 contracts. That's $55 per contract. That's 4 ticks. I then shorted based upon an L1 and L10, a T10, sorry. So I had both a T1, I should say, and a T10. I shorted here 10 contracts. You can see my entry. However, foolishly, I didn't check timing. I probably wouldn't have shorted on here, but at 7:30 we had a red flag where I decided to exit at +1, which is what's that, about $11-12 per contract. So well and truly covered my brokerage. So as you can see on both the ES trade and this particular trade, I decided to exit. Now a comment I'd just like to say here is I really don't like when the 89, and you'll see this on your own chart and my charts continually, when you see the 89 traveling along a pivot, I get really uncomfortable. I just don't like trading at, I like to see a clear breakthrough of the 89 or angling well and truly away from the pivot. I don't like it when the 89 EMA is traveling sideways. This is where you've got to get back to your scalper mentality to, hey, you know, we are snipers. Let's be patient, discipline and patience. Now here's what happened a little further on. We had a nice T10. We're starting to break down and away we go. We had some lovely trades thereafter. Another little comment I want to make is in a note I wrote down here is this, that the more indicators you've got on your charts, for more CPU usage you can use on your computer. Now where that is really relevant is when I'm trading the US market, when volume really picks up. I've got a pretty heavy-duty computer here, but the more indicators, and particularly with my pivot indicator, it really draws down, really sucks up the juice. So the more indicators that you've got open, the greater the challenge you can have in fast-moving markets. And what I tend to find, if the market's going crazy, I just can't get my orders. I can't get filled because I tend to have a lag. Now this is particularly relevant on my charting package. Just check your CPU usage. If you're finding that your computer is lagging, check your indicators and what's happening there. Just a little tip I wanted to give you. Now in closing, let's just get back to this here that I spoke about before. Any questions, please feel free to email me at rayftrader@gmail. The website, as many of you are waiting, where we're going to have links to all the videos, is still being built. Pain in the butt. I've outsourced it and they're getting there, but anyway, we are getting there, so it won't be long. So please feel free to drop me an email. I'm only too happy to have a free consultation on Skype if you want to find out more about what I can do for you and working with you. My challenge, or my goal is to take you from great to epic, to take you from ordinary to epic. You can make money as a trader. As you saw from the 4 trades I executed, once again you see this most days with me, they're all winners. 2 of them though could have turned against me. But what I had was discipline. I hit the pivots, I looked at the red flags, decided to exit. So traders, I'm going to start doing more recaps on, and let me just minimize this one as well while I'm here. I'm going to start doing more recaps on the Forex markets. And we can see here, this is for an example, the Euro USD. Look at this here, beautiful once again. Look at these T10s. Sorry, T1s I should say. One there, your entry was there. You had another beautiful one there. You had another one there. This is by the way 5 range, which is, if you're trading a standard lot, $50. But you had just here, you had a lovely pivot bounce. You just had one, and I hadn't looked at this by the way before this morning. 1, 2, 3. You had just had 4 winners in a row on the, and you had one there. Now Why wouldn't you have taken this one? You didn't take this one here because look at my zero lag, it's against me. But what you did would have taken, coulda, shoulda, you would have taken this one. Why? It's a T10. So the setups work on all time frames, all markets. Now this is dragging on. I know a lot of you are not going to have the patience to keep watching this if I keep going, but the setups work all time frames, all markets. Talk soon. Thanks, traders.